1-minute revision of the topic fictitious assets. What is the meaning of fictitious? The best way to understand this is to memorize the meaning of the word fictitious, which means not true or fake. Fictitious assets are expenses or losses which are not written off completely during the accounting period of their occurrence. For example, promotional expenses, preliminary expenses, and more. Some of the common examples of fictitious assets are promotional expenses, preliminary expenses, discount allowed on issue of shares, loss incurred on issue of debentures, underwriting commission, net loss incurred by a company. Key highlights of fictitious assets. They are written off against the firm's earnings in more than one accounting period. Basically, they are amortized over a period of time. Fictitious assets are recorded as assets in financial statements only so that they can be written off in the future. It is important to note that such assets do not exist physically or have any resale value. The part of the expense that is kept for the future is the fictitious asset, while the part which is written off in the current period is not.